This is Mamuni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. In this video, I am going to discuss and explain in detail how to prepare special journal entries logically by applying the rules of debit and credit. That is the traditional method or the three golden rules of accounting and the modern method or the modern rules of accounting. So let's get started. Chalo shuru kara ja. Now let's go through the problem and let's see the special transactions. So here is the problem. Journalize the following transactions in the books of Mamuni. So let's go through the first transaction. 2023 on 1st April, goods for rupees 20,000 were given away as charity. In bracket it is written sale price rupees 30,000. First we'll do it in rough to make you understand. Then I'll do it in fair. Okay? So let's do it. Now how to prepare journal entries? I have told you many a times. So let me tell you one more time. Number 1. The first step is to read and understand the transaction clearly. The second step is, since the first journal entry is a simple journal entry, we have to identify the two accounts involved in the transaction. Now what is a simple journal entry? Please remember, a simple journal entry is an entry which contains only one debit and one credit. Okay? Now what is the third step? The third step is to determine whether the two accounts come under real account or nominal account or personal account. Understood? What is the fourth step? The fourth step is, in order to find out which account is to be debited or which account is to be credited, we have to apply logically the traditional method or the three golden rules of accounting and the modern method or the modern rules of accounting. First, we'll apply the traditional method and we'll do it in rough. Okay? So let's identify what are the two accounts in the first transaction. So let's see the first transaction again. See, 2023 on 1st April, goods for rupees 20,000 were given away as charity. So what are the two accounts? One will be purchases account. Instead of goods, we have to write purchases account. I have told you many a times. And another will be charity account. Understood? We have to use the term purchases account instead of goods because goods are purchased for resale. So we have to use the term purchases account. Okay? So let's write. So the first account will be purchases account. And the second account will be charity account. Okay? And the second account will be charity account. As we know, purchases account comes under nominal account. And charity account comes under nominal account too. Purchases account comes under nominal account. And charity account also comes under nominal account. Okay? Now first, let's analyze charity account. Okay? Now what is charity? Charity refers to the voluntary giving of help in the form of goods or cash to those in need. Okay? So charity comes under nominal account as I have already told you. So now let's analyze charity account. Here when goods were given away as charity, charity is an expense for the business. Charity comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. So charity account will be debit. Now let's see the traditional method chart. See, nominal account, debit all losses and expenses. So charity comes under nominal account and charity is an expense. So according to the rule of nominal account, all losses and expenses debit. So charity account will be debit. Understood? Now what is the amount we are going to take? So we should consider rupees 20,000. Understood? Not 30,000 because the sale has not taken place. And please remember, we should consider goods at cost price and not sale price because the sale has not taken place. Understood? Mamuni gave away the goods as charity at cost price because the sale has not taken place. So how can you write the sale price? Understood? Now let's analyze purchases account. As we know, purchases account comes under nominal account. And as we know, when goods are purchased for cash, cash goes up from the business. So purchases is an expense for the business. So normally we debit purchases account. Why? Because purchases account is an expense. Purchases account comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. But in this transaction, goods were not purchased, but goods were given away as charity. So, should we debit purchases account or should we credit sales account? Tell me. Please remember, sales account should not be credited here because the sale has not taken place. And please remember, when the goods go out of the business at cost price, it means the sale has not taken place. So, charity account should be debited. That means we got to credit purchases account. But একটা যদি ডেবিট হয় আরেকটাকে ক্রেডিট করতে হবে. But why should we credit purchases account? Please note, here the traditional method or the 3 golden rules of accounting is not applicable in the case of purchases account. Why? Because here we have to credit purchases account instead of debit. Please remember, here purchases account should be credited because the purchases of the business is getting reduced by rupees 20,000. Because the goods purchased worth rupees 20,000 is no more in the business. Because Mamuni has given away goods worth rupees 20,000 as charity. So, goods worth rupees 20,000 is no more in the business. And please remember, this is not maths. So, how can you deduct rupees 20,000 from the total purchases? This is not maths. So, you cannot deduct or subtract. Rather, we have to use the offsetting account. Please remember, this is not maths. You cannot deduct rupees 20,000 from the total purchases. So in accounts or accountancy, if you write purchases account on the credit side, it automatically cancels out or deducts goods worth rupees 20,000 from the total purchases. Understood? Since goods purchased worth rupees 20,000 is no more in the business because goods were given away as charity by Mamuni. So if you write purchases account on the credit side, rupees 20,000 will be automatically deducted from the total purchases. Why we are writing purchases account on the credit side? Because purchases are reduced with the exact cost of goods contributed worth rupees 20,000 because there will be decrease of stock of goods in hand. The amount is reduced from the purchases in the trading account. Understood? The amount of rupees 20,000 is reduced from purchases in the trading account. Please remember, when we are writing purchases account on the credit side, we are actually offsetting in purchases account by reducing the balance of purchases account that is paired with. What is offsetting? Offsetting means cancelling or counterbalance or to compensate for something. Please remember, normally we debit purchases account, but here we cannot debit purchases account because goods were not purchased. Instead, goods worth rupees 20,000 were given away as charity. That means goods worth rupees 20,000 were reduced from the total purchases. So to reduce rupees 20,000 you always have to write on the credit side purchases account. If you write purchases account on the credit side, rupees 20,000 will automatically get reduced or cancels out. Understood? And we cannot write sales account on the credit side as well because the sale has not taken place. Please remember, whenever you have to reduce the amount, you have to write on the opposite side. This is known as offsetting. তুমি যদি opposite side purchases account লেখো, this automatically cancels out because total purchases we don't know. তো total purchases থেকে 20,000 less হয়ে গেছে. So how would you show it? You cannot show here. This is not maths. We cannot deduct rupees 20,000. So if you write purchases account on the credit side, it automatically gets reduced. Understood? Purchases gets reduced. So this is known as offsetting account as well. Understood? So please remember, the traditional method or the 3 golden rules of accounting is not applicable here. Here we have to reduce the amount. So to reduce the amount, we have to write purchases account on the credit side because goods worth rupees 20,000 is no more in the business. Understood? So please remember, when we write purchases account on the credit side, it cancels out the amount rupees 20,000. Understood? So the traditional method or the 3 golden rules of accounting is not applicable in purchases account. Understood? So purchases account should be credit. Purchases account should be credit. And charity account, as I've told you before, should be debit because charity is an expense and charity comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. I've shown you the chart also. So charity account should be debit and purchases account should be credit. And what will be the amount? The amount will be rupees 20,000 and not the sale price because goods were given away as charity at cost price and the sale has not taken place. If the sale has not taken place, you cannot write the sale price. Understood? So ignore the sale price. So let's write not applicable here, the traditional method. Not applicable here. So the traditional method or the 3 golden rules of accounting is not applicable here. Understood? Now let's see the second transaction. On 5th April, goods worth rupees 15,000 were distributed as free samples. So what is free samples? Please remember, sometimes the business distributes goods as free samples to the potential buyers in order to promote sales. So free samples can be treated as expense for the business. Understood? So free samples is an expense for the business. But please remember, instead of free samples account, we would use the term advertisement expenses account. Understood? So let's do it in rough. So let's identify the 2 accounts. This is a simple journal entry. The second transaction is also a simple journal entry. One account will be debit and another account will be credit. The first account will be advertisement expenses account. Advertisement expenses account. Understood? And another account will be purchases account. Understood? So purchases come under nominal account. And advertisement also comes under nominal account. Okay? Please remember, advertisement expenses is an expense for the business. And advertisement expenses account comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. So advertisement expenses account should be debit. So advertisement expenses account should be debit. Let me show you the chart. See, according to the nominal account, all losses and expenses debit. Advertisement expenses account is an expense for the business. So, according to the rule of nominal account, all losses and expenses debit. So, advertisement expenses account will be debit because advertisement expenses account comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. That is the reason we have debited advertisement expenses account. Now, let's see the second transaction again. On 5th April, goods worth rupees 15,000 were distributed as samples. So, the amount is 15,000. So, let's write advertisement account 15,000. Understood? And purchases account will automatically 15,000 because if one account is 15,000, another account will also be 15,000. Okay? Since this is a simple journal entry. Now, let's analyze purchases account. I have already discussed in detail about purchases account. But let me tell you in short again. Here the 3 golden rules of accounting or the traditional method will not be applicable. Let me write. The traditional method will not be applicable. Why? Because goods were not purchased. The reason is same as before. Because goods were not purchased. Why we are crediting purchases account? See. Here the 3 golden rules of accounting will not be applicable. Here we have to credit purchases account. Why? We have to credit purchases account. Why? Because the purchases of the business is getting reduced by rupees 15,000. Understood? Please remember, here also we have to write purchases account on the credit side or we have to credit purchases account. Why? Because if we write purchases account on the credit side, goods worth rupees 15,000 automatically gets reduced or cancelled because goods are no more in the business. Goods worth rupees 15,000 is no more in the business. Goods worth rupees 15,000 were distributed as free samples and goods were not purchased for the business. So you cannot debit purchases account. Here the traditional method or the 3 golden rules of accounting will not be applicable. You got to use your common sense. Here the main goal is to reduce rupees 15,000. So if we write purchases account 15,000 on the credit side, it automatically gets reduced or cancelled. Understood? Because we have to reduce the goods worth rupees 15,000 because goods worth rupees 15,000 are no more in the business. These goods worth rupees 15,000 were distributed as free samples. Understood? So we have to credit purchases account. I have discussed it in detail in the first transaction. Okay. Now let's see the third transaction. On 15th April, goods worth rupees 40,000 and cash rupees 10,000 was stolen by an employee. Stolen means churi kora. Now let's analyze the third transaction. Please note, here 3 accounts are getting affected in the third transaction. Number 1, purchases account. Number 2, cash account. Number 3, loss by theft account. Loss by theft because goods and cash both were stolen by an employee. So loss by theft account will also appear in the third transaction. So this is a compound journal entry. What is compound journal entry? Please remember, the first 2 transactions were simple journal entry. What is simple journal entry? A simple journal entry is an entry which contains only one debit and one credit. The third transaction is a compound journal entry. So what is a compound journal entry? A compound journal entry is an entry which contains more than one debit or more than one credit or both. Understood? That means debited मोर देन वन अकाउंट होते पारे, क्रेडिटे मोर देन वन अकाउंट होते पारे, डेबिटे टू अकाउंट्स होते पारे, थ्री अकाउंट्स होते पारे, क्रेडिटेও टू अकाउंट्स होते पारे, थ्री अकाउंट्स होते पारे. Understood? This is a compound journal entry. So compound journal entry is an entry which contains more than one debit, at least more than one debit or more than one credit or both. Understood? And compound journal entry is also known as composite journal entry. Okay? Now let's do it in rough and analyze the transaction. So first will be purchases account. Second will be cash account. And the third will be loss by theft account. Understood? Cash account comes under real account. Okay? And loss by theft account comes under nominal account. Understood? Now let's analyze, should we debit cash account or should we credit cash account, or should we debit loss by theft account, or should we credit loss by theft account? Let's see the third transaction again. On 15th April, goods worth rupees 40,000 and cash worth rupees 10,000 was stolen by an employee. So let's analyze cash account first. Since cash rupees 10,000 was stolen by an employee, so rupees 10,000 goes out from the business and cash comes under real account, and according to the rule of real account, what goes out is credit. So cash account will be credit. Let me show you the chart. So the amount will be 10,000 here. Okay, the amount will be 10,000. Cash is 10,000. Please remember, cash rupees 10,000 was stolen by an employee. Here the amount will be rupees 10,000. Now see, real account. Debit what comes in, credit what goes out. See, when cash rupees 10,000 was stolen by an employee, cash goes out from the business. Cash comes under real account, and according to the rule of real account, what goes out is credit. So cash will be credit. Understood? Now let's analyze loss by theft account. As we know, loss by theft account comes under nominal account. Here, loss by theft account is a loss for the business because goods worth rupees 40,000 as well as rupees 10,000 cash was stolen by an employee. So, loss by theft account is a loss for the business. Loss by theft account comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. So, we'll debit loss by theft account. What will be the amount? Not 10,000. Cash rupees 10,000 plus goods worth rupees 40,000 was stolen by an employee. So the total loss will be 50,000. Understood? Goods worth rupees 40,000 plus cash rupees 10,000. Both were stolen by an employee. So the total loss by theft for the business will be rupees 50,000 and cash rupees 10,000 was stolen by an employee. Now let's see the traditional method chart. See, the three golden rules of accounting or the traditional method. See, loss by theft account comes under nominal account since it is a loss for the business. Debit all losses and expenses and it comes under nominal account. And according to the rule of nominal account, all losses and expenses debit. So, loss by theft account will be debit. That is what we have done. Now, let's analyze purchases account. See, purchases account comes under nominal account. Here the traditional method or the three golden rules of accounting will not be applicable here. Why? I have already told you about the purchases account. Let me tell you in short. Here the three golden rules of accounting or the traditional method will not be applicable because here goods worth rupees 40,000 was stolen by an employee. So this is not purchase of goods. So we cannot debit purchases account. Normally we debit purchases account because purchases account is an expense for the business. Because when we purchase goods for cash, cash goes out from the business. So purchases account is an expense for the business. But here we cannot debit purchases account because the business has not purchased goods. So here goods worth rupees 40,000 was stolen by an employee. but goods worth rupees 40,000 is no more in the business. So we have to reduce goods worth rupees 40,000. So how to reduce? So if we credit purchases account, since the purchases of the business is getting reduced by rupees 40,000, because if you write purchases account on the credit side, goods purchase worth rupees 40,000 automatically gets reduced or cancelled, because goods worth rupees 40,000 is no more in the business. And what is our goal? The main goal is to reduce goods worth rupees 40,000. We have to reduce purchases account by rupees 40,000, since goods worth rupees 40,000 is no more in the business. So how to reduce? You cannot deduct or subtract in accounts. So we have to write purchases account on the credit side. If we write purchases account on the credit side, automatically rupees 40,000 gets reduced or gets cancelled. So purchases account is an offsetting account here. Understood? তুমি যখন purchases account কে credit side এ লিখছো, rupees 40,000 already deduct হয়ে যাচ্ছে বা cancel হয়ে যাচ্ছে বা offset হয়ে যাচ্ছে, because business এ rupees 40,000 এর goods আর নেই. Understood? And goods purchase ও হয়নি. এটা কি হয়েছে? Goods rupees 40,000 was stolen by an employee. একজন এমপ্লয়ি চুরি করেছে. So we cannot debit purchases account since goods were stolen by an employee. But goods worth rupees 40,000 is no more in the business. So we have to reduce the purchases. So how can you reduce the purchases? By writing purchases account on the credit side with the amount rupees 40,000. Understood? So here loss by theft account will be debit 50,000. To purchases account credit 40,000. Cash account will also be credit. To cash account rupees 10,000. Understood? Now let's see the last transaction. On 25th April, Mamuni withdrew for her personal use cash rupees 10,000 and goods worth rupees 5,000. So please note, here also 3 accounts are getting affected. Number 1, drawings account. Number 2, cash account. Number 3, purchases account. Understood? Here also 3 accounts are getting affected. So this is a compound journal entry as well. Okay, let's do it in rough first. So first will be drawings account. Second will be cash account. And the third will be purchases account. Okay. Now drawings come under personal account. Cash comes under real account. And purchases comes under nominal account. But here also, the traditional method will not be applicable. The same reason, I'll explain it in short also. Traditional method will not be applicable. So let's analyze drawings account first. Here when Mamuni withdrew cash and goods for her personal use, she is the receiver of cash as well as goods. And since drawings account comes under personal account, according to the rule of personal account, the receiver of the benefit is debit. So drawings account should be debit. Please remember you have to see drawings account from the point of view of the proprietor or the business owner, or in this case Mamuni, because when Mamuni withdrew cash and goods for her personal use, she is the receiver of cash and goods. Understood? And drawings account comes under personal account. So according to the rule of personal account, the receiver of the benefit is debit. And never ever see drawings account from the point of view of the business. Okay, now let me show you the traditional method chart. Personal account. Debit, receiver of the benefit. So here Mamuni is the receiver of benefit. When she withdrew for her personal use cash rupees 10,000 and goods worth rupees 5,000, she is the receiver of cash and goods both. Okay, receiver of the benefit is debit. That is the reason drawings account is debit. That is what we have done. Now let's see what will be the amount. Let me show you the transaction. Mamuni withdrew for a personal use cash rupees 10,000 and goods worth rupees 5,000. So the total drawings will be 10,000 plus 5,000, 15,000. Total drawings will be 15,000. Okay. So let's write. Amount will be 15,000. Okay. Understood? So let's analyze cash account. When Mamuni withdrew cash for a personal use, rupees 10,000. Cash goes out from the business. Understood? Here you have to see cash account from the point of view of the business and not from the point of view of the proprietor. Please remember, here you have to see cash account from the point of view of the business and not from the point of view of the proprietor. In this case, Mamuni. When Mamuni withdrew cash, rupees 10,000 for her personal use, cash goes out from the business. So from the point of view of the business, cash goes out from the business. So cash account comes under real account. And according to the rule of real account, what goes out is credit. So we'll write out credit here. Here, when Mamuni withdrew cash rupees 10,000 for a personal use, always see cash account from the point of view of the business and not from the point of view of the proprietor or the business owner, or in this case Mamuni. So cash goes out from the business and cash account comes under real account. And according to the rule of real account, what goes out is credit. Understood? So cash account will be credit, and that is what we have done. So what will be the amount? Rupees 10,000. Okay. Mamuni withdrew for her personal use cash rupees 10,000. So cash account will be 10,000 and purchases account will be 5,000 and the total drawings account will be 15,000. 10,000 plus 5,000. Understood? Now let's analyze purchases account. Please remember, here also the traditional method or the 3 golden rules of accounting will not be applicable. Why? Purchases worth rupees 5,000 were not purchased for the business. Goods were withdrawn by Mamuni for her personal use. So goods worth rupees 5,000 is no more in the business. We have to reduce rupees 5,000. So we have to reduce purchases account rupees 5,000. So how can we reduce purchases account? If we write purchases account on the credit side, since the purchases account of the business is getting reduced by rupees 5,000, so if we write purchases account on the credit side, goods purchased worth rupees 5,000 automatically gets reduced or cancelled because goods are no more in the business. Understood? So purchases account will be credit. Okay? So these are some of the very special journal entries. I hope you understood and everything is clear now. Now let me write in fair. See the first transaction, 2023, 1st April, rough work. Charity account debit 20,000, purchases account credit 20,000. So we'll write. Just we are copying it. I have already done it in rough work. So now just copy. I've done it in rough just to make you understand. Please remember you have to do it in fair. I'm now just copying it in fair. So charity account debit to purchases account rupees 20,000. See. So let's write. Charity account debit. Charity account debit 20,000 in the debit column for charity account to purchases account rupees 20,000 in the credit column. Okay. So we'll write here. Now let's see the second rough work. See on 5th April advertisement expenses account debit 15,000. Purchases account credit 15,000. So advertisement expenses account debit to purchases account 15,000. So let's write. Advertisement expenses account to purchases account 15,000. 15,000 in the debit column for advertisement expenses account and for purchases account in the credit column rupees 15,000. Understood? Now let's see the third rough work. See, On 15th April, loss by theft account debit 50,000, purchases account credit 40,000, cash account credit 10,000. This is a compound journal entry. Here, 1 debit, 2 credits. Okay, so let's write. Loss by theft account. Loss by theft account. Theft means churi. Loss by theft account 50,000. 50,000 to purchases account. To purchases account 40,000. To purchases account 40,000. To cash account 10,000. Understood? See, if you add up these two, 40,000 plus 10,000, it will give you 50,000. So, loss by theft account will be 50,000. Please always remember, debit should be equal to credit. 40,000 plus 10,000 will give you 50,000. Debit should always be equal to credit. Understood? Now, let's see the last transaction. Now, see, the last transaction, the last rough work. On 25th April, drawings account debit 15,000. Cash account credit 10,000. Purchases account credit 5,000. Understood? So, drawings account debit 15,000, to cash account 10,000, to purchases account 5,000. So, this is a compound journal entry. Here, 1 debit and 2 credits. So, let's write. So, we'll write drawings account. So, we'll write drawings account debit 15,000 to cash account 10,000. I've shown you the rough work. Cash account 10,000 to purchases account 5,000. So, if you add up these two, 10,000 plus 5,000 will be 15,000. Always remember, debit should be equal to credit. Okay. So, if you add up the total of debit column, you'll get rupees 1 lakh. And if you add up the total of credit column, you'll get rupees 1 lakh also. Please remember, the total of debit column should always be equal to the total of credit column. Now, your journal entry is complete. I hope you understood. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful. I'll catch you all again in the next video. Till then, keep rising and keep shining. Bye-bye. Take care, stay safe and stay blessed always.